All right, everyone. Well, thank you for joining us here on our monthly edition now of Current Franchise Sales and Marketing Trends, part of the Franchise Your Business webinar series. My name is Tom Dufour, and I will be your host for the duration of this event. I'm the founder and CEO of Big Sky Franchise Team. And if you're new to Big Sky Franchise Team, welcome. We're glad you're here. And this is part of our educational series to try to keep you in the loop of what's happening and the whole wide world of the greater economy and marketing trends and how all of these play together and contribute to current franchise sales and marketing efforts. So as I had mentioned, this structure and what we're going to go through, I try to go through a bunch of different data points. So we try to start at a macroeconomic data basis and start to go through some small business economic data, and then we get into some franchise specific data as well. And each of these we like to look at and think about how this information is possibly going to be impacting your franchise sales and marketing efforts. So I'm going to share my screen and we will start going through each of these pieces one at a time here. And let's see here. Oh, by the way, if you do happen to have questions, please feel free to use the raise hand feature or type something in the chat box. We generally have relatively small group of a small number of people attend the live session here, so that feel free to interact, and we will leave some time at the end for some general Q&A. So I'm going to go ahead and share my screen, and we will jump right into it. So the first box and program that I like to take a look at is what is put out by the Institute for Supply Management. They put out 3 reports, and they put out what's called the Purchasing Managers Index. And so this is the first and the one that I really like the most. It's called the Manufacturing PMI. So the Purchasing Managers Index for manufacturing, the reason this is important is because manufacturing purchasing is a leading indicator to tell us where the economy is headed. So when we see what it looks like today, chances are that's what it's going to look like maybe 6 months or 12 months from now. So if we look at the PMI, it says the U.S. manufacturing sector contracted in January as the manufacturing PMI registered 47.4%, 1 percentage point below the seasonally adjusted reading of 48.4% in December. This is the 3rd month of slow contraction and the continuation of a downward trend that began in June 2022. So and as you can see here, anything below this 50% line, this is the manufacturing break even, and then 48.7% is the economy break even line, meaning where the economy is basically at break even. So you can see at 47.4, we're below that economy break even line, which to me is one of these indicators that's pointing to the idea that whether we go into a recession or not, it's probably going to be somewhere near this kind of break-even line, kind of an up or down. We don't know which direction it might be headed. So just know that manufacturers have, purchasing managers have decreased the amount of inventory that they're purchasing, which means that they are forecasting slower times ahead. Now, that could maybe be caused from some previously pent-up demand from the COVID shutdowns that happened and reopenings that were occurring. It could just be they're seeing a slowdown in general. It remains to be seen what that causes, but nonetheless is something you need to be aware of. Secondly, it's just something that if your franchise candidates are talking about it, this is some data points. These are some data points for you to be talking about to help provide to them. The second piece here we look at from the Purchasing Managers Index is that this is for the services industry. And so services bounced back, as you can see from this line here. It's bounced back from a drop there in December of 2022. And it says in January, the services PMI registered 55.2%, a 6 percentage point increase compared to the seasonally adjusted December reading of 49.2%. A reading above 50% indicates the service sector's economy is generally expanding. Below 50% indicates it is generally contracting. The past relationship between the services PMI and the overall economy indicates that the services PMI for January, 55.2%, corresponds to a 1.0 8% increase in real gross domestic product on an annualized basis. So I think what they're inferring here is that as the services sector, as that's positive in growth, they're suggesting here is what they're indicating that the overall U.S. economy and the gross domestic product is going to grow as well. So they're saying they didn't quite come out and say there's a correlation there, but they implied that. So remains to be seen. I don't want to put words in their mouth, but they seem to imply that. Now, the good news is that services is growing. And as you know, the U.S. economy is predominantly driven by the services sector. So next, we're going to jump into the hospital sector. And this is PMI, the Purchasing Managers Index report for the hospital sector. Now, as healthcare continues to increase its size and is such a large part of our overall economy, this is the Institute for Supply Management's newest report that's been out for about 2 years or so, maybe 3 years. And so it says economic activity in the hospital subsector grew in January for the 32nd consecutive month. Some say the nation's hospital supply executives in the latest report. The hospital PMI registered 52.5 in January, a 4.5 percentage point decrease from the December reading of 57 percentage points. And so what I'd like to point out, I'm going to zoom in on this screen a little bit just for you all to see, is how the hospital PMI has really you can see in 2021, it was growing, and then it just crashed down in 2022. And ever since, it's just kind of been almost like this yo-yo, up and down and up and down and up and down. And, for me, what that says is purchasing managers, it's unknown what to expect. I think this is just my interpretation of the data, is showing that during COVID, hospitals were buying all kinds of products all the time. And as the COVID shock has worn off or gone away, we're seeing this crash because purchasing managers don't know, what should I buy? And so I think we're going to see this zigzag or this yo-yo up and down and slowly start to smooth out over the course of this year as purchasing managers start to kind of resettle into the normal, whatever this new normal is going to be for healthcare and for hospitals. Okay, next is the unemployment rate. And by the way, all three of these factors, so if we look at this, manufacturing's down, services is up, hospital is up and down, right? It's going up and down. So what does that mean? It's mixed, okay? So when you're franchisees, you may have candidates talking to you about some of this data. It's just very mixed data here. For example, here's our U.S. unemployment rate. In January, it was at 3.4%, the lowest it's been in a year. We'll look at the 5-year number. We'll look at this 10-year number. I mean, look at this last 10-year, and this is from tradingeconomics.com on their United States unemployment chart. And you can see how low this is. Now, a large part of that is due to the fact that the number one challenge I hear from our clients and from small businesses across country is the need for people. And the numbers, I believe, about 3 million, we're underemployed about 3 million people in the U.S. Currently, meaning that there are more job vacancies than there are people to fill them. And so that's just a real big pain point that people are feeling. Next is the inflation rate. So what I'm showing here, this is the 5-year inflation rate for the United States. And so you can see prior to 2020, kind of hovered around this 2%, 2.5%. It dropped during COVID. And then you just see this huge spike. It starts coming here 2021, these big spikes into 2022, it reached 9%. And remember, this is year over year. So this 6%, and for this month, for January, it was 6.4%. Remember, that's over the number that occurred last January, which was right around almost 8% last January. So it was 8% and then another 6%. So this is why it's growing so much and what's making this challenging here. So hopefully that works. And it looks like my internet is lagging a little bit here. So hopefully the audio is coming through. I'm looking up at the video. Things seem to be a little choppy here. Okay, next, this is from the University of Michigan. They produce a consumer sentiment report. And this is a consumer sentiment report over the last 50 years. So an index value in 1966, it says, was 100. And so we're looking at this over the last 50 years, and you can see this down, up and down and up and down, and you can see it bottom out here. You have a comparison to what looks to be about around 1980 was the lowest number here, and around the year 20 at the end of last year was at a low range. Looks like we have a question here. Aref, I don't know if you can type it in. I can go ahead and unmute you here. Go ahead and ask your question there. If you want to go ahead and unmute yourself, Aref. Oh. All right. Well, Aref, go ahead and when you have a moment, if you can unmute yourself and ask the question, that'd be great. Otherwise, I'm going to keep moving through here. So I think what's interesting to know is that consumer sentiment was at its lowest point here at the end of 2022, and we see this coming back up. It's starting to move up. Consumers, hopefully you're seeing it in your own business, but consumers are starting to feel a little more confident about making that progress to move forward. Okay. Part of that, I think, in large part, is we look at the coronavirus. So this is from the worldometers.info coronavirus, and this is the USA. So this shows a rolling 7 days trend here in the United States. And so I'll get this chart back up for us. And you can see the rolling 7 days shows at about 20,000 daily new cases on average over the last 7 days. And you can see really for the last year how this has just really been relatively flat. And then we can scroll down and take a look at total deaths that have been recorded as well here. And you can see since, really about around April or so of last year, the 7 day average here, that's what this red brown line is, has really continued to reduce. And just by way of comparison, last week, the last 7 days showed 211 average deaths per day through the coronavirus. So greatly reduced from where it was previously. So just I think that's worth noting. One of the things that I'd like to talk about here is, let's see. There we go. One of the points I like to talk about, I've talked a lot about on our report, is the number of new business startups that are new business applications. So in January 23, so last month, there were almost 421,000 new business applications nationally. And look at the new business applications. It's really been incredible, which means that new business startup is on the mind, and the psyche and the mindset of people just across the country, which means that people are thinking about it. So you may never know when you're talking to someone in your neighborhood, talking to someone you meet at a networking group, someone you're meeting at your when you're at your church or synagogue or wherever you're off to on a weekly basis, and you're meeting with people, chances are they might be thinking of it. So if you're a franchisor, this is something for you to be considering, just talking about that we're expanding, we're franchising, we're looking for the right fit. And that person you're talking to might not be the right one to buy your franchise, but chances are they might not know someone. So you might want to say, just for example, when you're talking to people, we're looking to add franchisees. By the way, if you know someone, if maybe you or someone you know might have an interest in learning more about our franchise, I'd love to talk to them. Would you mind connecting us? So sharing some information like that is always helpful. So this number is really, really important for you to be thinking about. If you're in a B2B space, this means lots of new potential customers for your franchisees are coming into the business. as well. So let's jump over to the small business startup sentiment index. This is an index that's put out by Franchise Ventures, and they put together a great small business sentiment index report. They've been doing this for a few years now. It's excellent. This was just released February 8th. So I try to bring you the most current data of what's happening right now for us to look at this. What's interesting to note from their data, it shows that over 58% of aspiring business owners say that now, right now, is a good time to launch their business. And more than 2/3 say that they are more or much more likely to start a business today than 3 months ago. Okay. And about 23.4, so almost 25%, almost a quarter, are putting their plans on hold. So I think that this data is very interesting. So whether you think, whatever your point of view is on where the economy is or isn't going, 58% of owners, aspiring business owners, are saying that now is the time. So that means about 6 out of every 10 that are coming through are saying now's the time. That means you want to be talking about now. And I've been waiting to make this point until we got to this part here, because if 58% here of aspiring business owners say now is the right time, and the economy is maybe questionable, right? We find that economic cycles come and go. Well, the reality is, for someone you might be talking to for your franchise, they are, if they're going to buy your franchise, even if they were to say, let's go today, you still have to go through all the paperwork, all the documents, all the everything that you have to close that agreement and franchise sale. That even on a fast side is going to be 30 days. And it might still take 3 months or 4 months by the time all the paperwork's signed. If you have a fixed location, it's going to take probably close to a year to find that location, maybe 18 months. Maybe you get lucky, it takes 6, but realistically, it's going to be a year. So we're talking 15 months from now for a home services business, getting vehicles, trailers, all of those things are taking time. So that's 3 to 6 months, even as we see here for the Purchasing Managers Index with what they're seeing. New orders and supplies from manufacturers, if I jump over, they're purchasing less or about the same. So that means the current inventory rates are going to stay the same, or if demand increases, it's going to go up. So just some food for thought and things for you to be talking to your franchisees about, that even though they're buying the franchise today, now is a good time to start, right? 60% is saying 58% are saying I want to start now. So encourage them to get started today, knowing that it could be 6 months, 18 months from now when they actually open, and the economy is going to be in a very different place than it is today. So a couple things I want to take a look at on our charts here. We talked about a couple of the highlights already, but where is it? Here we go. Okay, what are the concerns of the people who are looking at opening or starting a franchise right now? What are their concerns? So here's the reality. 74% of budding franchisees or startup business owners, aspiring business owners, say that access to credit or funding is their biggest factor into contributing to wait or not do anything with starting that business. 74%. So essentially 3/4 are saying, boy, access to funding is critical. Approximately 40% say the current economic climate. Okay, 18% say the stock market. Those are the top 3. But far above and away is access to funding or credit. So if you're a franchisor, if you do not have a third-party vendor for funding, financing, SBA loans, whatever that might be, I encourage you to really consider finding a solution to that. Or if you have the ability to do some form of in-house financing for franchisees, you might want to consider that. If 74% of them think, or 74% of aspiring owners are saying, this is my concern, chances are that average is going to play out with average franchisees as well. And then addressing the economic climate, like we're talking through here, to have some information and data to share with candidates and explain how your business model in your marketing helps solve that problem. Maybe there's an economic concern they're afraid of. talk about how your business maybe does well during certain conditions or in certain environments, or how the franchisee can change their business model to accommodate the current market conditions. All of those things are going to be important for you. Okay, so I thought this was an interesting article. This was released 2 days ago on February 15th. This was from franchiseinsights.com, and it just talks about ChatGPT. If you're familiar with that artificial intelligence, it's getting a ton of fanfare. And so Franchise Insights just pulled a chart to say, how does this compare to some popular things? So interest over time. So they have ChatGPT in blue, and it looks like in red. I wonder if that they missed something there. They have Kim Kardashian in yellow, and green is TikTok. So you can see this ChatGPT. I see ChatGPT with no space and with a space. And you can see how that's grown over the last 3 or 4 months, how it's almost comparable to TikTok. Daily visits continue to grow. And really, it's just letting you know to be aware of how some of these artificial intelligence trends are coming, and especially with some of these intelligent chatbots. So it said with Google's coming out with an artificial intelligence search engine. I know Microsoft has one as well. And what this article is saying is to start thinking and be prepared for the changing market conditions that are going to be coming with artificial intelligence driven search. So right here it says, so the bad news is that AI-driven search is another headwind to consider, along with the elimination of third-party cookies from Chrome, the world's most popular browser, and Google's upcoming cessation of tracking across apps in 2024, as it follows in Apple's ATT footprints. Cost per clicks will go up, and clicks may become less plentiful. So just some food for thought as you're considering it. And my final chart that I always like to show from Franchise Insights is which categories in franchising are the most popular right now. And so this data is an aggregation. It aggregates, Franchise Insights aggregates all of its search queries from all of its franchise lead generation websites, which, by the way, is the largest in the whole country. So it's the greatest sample size you're going to be able to get. And which industries or categories had the highest percentage of inquiries come through. Okay. So number one we have is home services. So home services starting to grow again. That is going up. Business services is number 2 at 15%. Senior and healthcare is 14.1%. Cleaning and maintenance is at 13.8%, and food and restaurant is at 8.3%. Those are our top 5 categories. The next 5 beyond that is financial services at 5%, child-related 4.9%, education 4.2%, pet services 2.6%, and retail at 2.5%. So this just gives you an overview of what is the current interest is and which categories had the largest gains over the last 90 days. So food and restaurant is gaining. Health and fitness is gaining, sports and recreation, retail, automotive, pet services, computer and internet, staffing and personnel, and child-related businesses. So those are the big trends, big takeaways, things that you should know are going to be on the minds of your prospective buyers. And you need to be aware, which is why we do this, so that you are aware of these coming trends, so that you can be talking with your candidates about these, or even with your franchise system, to be talking and discussing this with your franchise system. So with that, I'd love to open this up to conversations from the audience here to see if you had any questions. I will pause for a moment for us to open up for some talking points. And you can go ahead and type into the chat, the Q&A, or just go ahead and raise your hand and I can unmute you. All right. Well, I'm not seeing anything come through. I hope all of you have a great weekend. We will publish this over the course of the next few days. It should be live next week on our YouTube channel for you to take a look at. Happy President's Day. And I believe that's Monday. And thank you again for tuning in to our our educational webinar session here on current franchise sales and marketing trends. If you are a current client or have questions related to franchising your business or expanding your franchise model, we'd be happy to talk further with you and help answer some questions. Thanks, everyone. Have a great weekend. Appreciate you being here.